Well, good afternoon, everyone, and I'm pleased to talk about my favorite topic, which is the uranium market. And I think if you're a longtime uranium bull or you're a seeker wanting to know more about the uranium and nuclear energy industry, I hopefully can make this 20 minutes engaging for you. So as I said this morning, the uranium market now is really driven by there's three legs of the stool of the uranium investment thesis right now. That failure of the green energy economy to really deliver a decarbonized economy and realizing nuclear has to have a fit in it. The Russian invasion of Ukraine changed everything in our industry, given after the Cold War we really opened up to the Russians and invited them into our industry and became over-reliant on them. And then just the nuts and bolts of supply and demand of uranium that you would look at any commodity, the production, inventory, demand, reactor growth. So we'll unpack each one of these in a lot more detail. But I don't think it's sensational to say that the green energy transition has been a colossal failure to date. I'm not saying that the objective of achieving a cleaner, greener, more carbon-free economy is a bad objective. I'm just saying we win at it with a lot of ideology and not enough math and science. And frankly, there's nothing more math and science than nuclear power. But really beginning the lights are coming on even for the political left and right, environmentalists and industrialists, and that's where we're really seeing profound changes in our industry. And again, I'm not here to beat up on wind and solar, but they're intermittent power sources. They run 30% of the time. Yes, they're clean and carbon-free, but nuclear is also as clean and carbon-free and safe as wind and solar, but it runs 24/7, 365 days a year. In the United States, it may surprise you, we get 20% of our electricity from nuclear power, 1 in 5 homes, but it's a full 50% of our carbon-free energy. It's more than double what we get from wind and solar. And then the emerging and small modular reactors can revolutionize energy, and we're beginning to see the first-of-a-kind units coming online in the United States and elsewhere. These facts have all changed public opinion. This is the favorability to nuclear energy from recent polls in the United States, but we're seeing similar results in Europe, Asia, and elsewhere. Even countries that have been typically split on nuclear or unfavorable towards nuclear, like Japan and Germany, their public is now turning more positive on nuclear, and that's now giving the politicians cover. It's okay to talk about nuclear energy now on Capitol Hill. It's okay to invest in nuclear energy now, and that's one big change we saw in the EU. Prior to this year, the EU taxonomy rules did not consider nuclear energy a clean or sustainable energy source. And that restricted a lot of investment from big institutions, pension funds, hedge funds, in nuclear energy or uranium. That was reversed. They voted to overturn that. They took Germany kicking and screaming and overturned them. But you see countries like France not reducing their nuclear reliance. They're going full speed ahead. The UK just launched Great British Nuclear last week to build a whole new generation of big reactors and the small modular reactors like Rolls-Royce is proposing there. We're seeing Sweden, Belgium, Netherlands all reverse their phase-out policies and go with more nuclear going forward, building new reactors. Energy independence is national security, and that's something we've also seen in all of this. And you really need to look no further than Germany. Their Energiewende energy policy was a case study in failed energy policy. The objective 15 years ago was to phase out fossil fuels, phase out nuclear, and go with 100% renewables. And they subsidize it to the tune of several hundred billion, we're up to the billion euros, I think now, in subsidies to that industry, which have resulted in what? Electricity prices, in some cases, double that what France is enjoying with 100% nuclear power, zero progress to carbon reduction. Germany's burning more lignite coal to generate electricity today than they ever have. And it really compromised Germany during this Ukraine invasion by Russia and compromising them because of their reliance on Russian gas. So, we're seeing what happens if you don't have nuclear in the mix and you still are going down that cleaner, greener energy policy. But, I'll come back to it. The U.S. has its own Russian reliance problem. We shouldn't beat up on Germany. 50% of our uranium for 20% of our electricity comes from Russia, Kazakhstan, and Uzbekistan. Again, the fundamentals, I'll unpack each one of these in more detail, but nuclear growth has been increasing globally at about 3% per annum. We're going to see forecasts come out by the World Nuclear Association at the end of this year that will upgrade that to closer to 5 to 6% growth per annum. We've seen the reactor growth of new large reactors coming online, more under construction. What's really interesting for the uranium market is this demand significantly exceeds current production. We'll talk about that. And the production discipline. We had an oversupply problem in the market. After Fukushima, prices fell, but producers continued to produce, and Kazakhstan increased production, didn't decrease. We've reversed that. Speculative and financial buying by companies like Sprott Physical Uranium Trust, Yellowcake, Zuriinvest have been buying up uranium and drawing it off the market. And then the bottom line is we need significant new production by the end of the decade, and it's hard to identify where that's going to come from right now. But very much look for a supply squeeze developing in 2024, 25, 26. Even the utilities will acknowledge that, and it's no surprise we're up 215% in the spot price from November 2016. 59 reactors have broken ground or under construction, and that's on top of the 69 that we've added to the grid globally in the last 9 years. If we didn't have a new build, new growth story, the existing reactors have incredibly increased their capacities and their uranium consumption. For example, in the United States, we went from 104 reactors to 93 reactors, yet still supply 20% of the electricity. We're uprating them, we're extending the licenses. This is equivalent to building new reactors, it's just we're running the existing ones more efficiently. And that's certainly also happening in other countries. Sweden, Canada, Belgium, Korea, France, US are all going to life extensions of existing reactors. We could have a whole session on small modular reactors. These are the small, scalable, built-in factory, shipped on-site reactors. They're not 1,500 megawatts like building a major infrastructure project. They're 100, 50, 100, 200 megawatts, or a micro reactor, 2 to 5 megawatts. But these have a huge market unfolding. The US government, Canadian government, UK government are all funding the first-of-a-kind units. Companies like NuScale in Idaho, TerraPower in Wyoming, X-Energy in Washington State and Texas. These are coming in to either provide power to copper smelters like what's happening in Poland with NuScale, or Dow Chemical where they're powering petrochemical facilities on the Gulf Coast, or they're just replacing coal-fired generation in places like Wyoming where those plants are being phased out by the end of the decade. But this has incredible impact on uranium demand. It's not really factored in to the growth numbers in our industry as of yet, but it will. The demand gap is very real. The world consumes 195 million pounds of uranium every year. We're producing about 144. This has been the case for several years. So the gap's been made up by inventories and secondary supplies. That's significant because, listen, obviously the secondary supplies and inventories were quite large because the market was able to clear efficiently on that basis. But as we've said, there's factors coming in of speculative demand. Sprott Physical Uranium Trust alone have bought over 50 million pounds off the spot market in recent years. Companies like UEC, URC, just those two companies bought 8 million pounds off the market. What's happened is we've now cleared the excess supply from the market, and I'll show you what that looks like. But the gap is quite large. 500 million pounds gap identified by 2033. If you're going to build a uranium mine from scratch, you probably need 8 to 10 years to make that happen. So that's where we get the supply squeeze situation. Government policy has been incredible. There's 15 bills currently circulating in the U.S. Capitol are pro-nuclear fuel cycle bills, banning Russian uranium and putting dollars towards revitalizing our uranium industry. No one wants to ban Russian uranium and then have U.S. reactors shut down because we were over-reliant on the Russian supplies. So we have bipartisan support. We're hoping that these bills can make it to the floor by year end. And for us, the uranium producers, we're just lobbying for an extension of the strategic uranium reserve that UEC participated in earlier this year. Get a lot of questions about Kazakhstan. I mean, even in absence of a ban on Russian uranium, where Kazakhstan uranium tends to go through, this country became the world's largest producer, accounting for about 40% of world supply in a very short period of time. So people have said, well, why can't Kazakhstan just produce more, export more? Well, I'll tell you what's happening is with the Russian sanctions, all their exports used to come out of the port of St. Petersburg. That's really been prohibitive. They've been trying for 2 years now to get deliveries out through 5 countries, Armenia, Georgia, out the Black Sea, which isn't exactly a safe neighborhood these days. But even in absence of that, a bigger thing is happening, and this is a big takeaway. The Russians, through Rosatom, control 50% of the uranium supply in Kazakhstan. If they're under global sanctions, Kazakhstan becomes more important to them than ever. China, while we're focused on other things in the West, China's been gobbling up the other half of Kazakh supply. Joint ventures, long-term contracts, even a global trading hub, which is a nice name for something where they want more uranium coming from Kazakhstan into this global trading hub on Chinese territory. I got news for you, that's not coming out of China once it goes in. So again, in the West, we may face a situation where the world's largest producer is not for us. All those supplies get consumed by Russia and China. Enrichment underfeeding. This is a strange concept, but we can get enriched uranium by putting it in centrifuges, natural uranium, and enriching the U-235 isotope. We have 2 inputs. We can put in natural uranium or the separative work units. When we had lots of enrichment capacity, we used less uranium, which cast off excess supplies into the market to the tune of about 25 million pound a year supply gap just by this underfeeding. Now we're going to overfeeding, which is the opposite. We're losing Russian supplies of enrichment services, so we need to run our plants in the UK, Netherlands, Germany, and US more efficiently. So we're overfeeding. We're feeding more uranium and less separative units to get the same amount of enriched uranium. That flips that 25 million pound supply source to a demand source. So a very significant impact, which has only begun. So where that leaves us is the supply and demand gap that we see here. The black line with the blue shading are demand and various scenarios of reasonable growth. The gray bars are production from known and existing mines. It has the Canadian mines, the Kazakh mines at full production. That gap really needs 8 to 10 new mines coming online between now and 2030. It's going to be very difficult outside of mines that are restarts of existing operations or fully permitted mines that are moving forward. And there is a small handful of those, but we need more. The black bars are secondary supplies. That's what's been making up the gap, but that's now gone. An important point here is that in 2023, we have now transitioned from an oversupplied, inventory-driven market to a production-driven market for the first time in decades. This is a profound change. The marginal pound that supplies the spot market going forward comes from a mine, which has cost of production, availability of production, permitting, licensing. It's not an inventoried pound that may not have even a cost associated with it if it's coming from a government inventory. So this really changes the equation. And then the uncommitted demand going forward couldn't be more substantial. The bar on the left shows what utilities need to buy, which is not yet under contract. That's where you get that 500 million pounds cumulatively by 2033. And the bars on the right show how much long-term contracting has been done in recent years. The industry uses 200 million pounds a year. We've been contracting at under 125. There's going to be a catch-up, and it's beginning. Utilities are contracting, but they're finding that the available producers are fully committing a lot of their production. Big supplier like Cameco, they've been contracting extensively over the last 3 or 4 years, and even as big as their mines are in Saskatchewan, they're not unlimited, and they're getting to the point. They signed one contract with Ukraine recently. It's a 12-year contract that takes up 19% of their Tier 1 production. So we really have an exciting period ahead of us. It's not surprising the uranium price is at 56. If you're asking, well, have we missed it? No, 56 isn't the incentive price for most of the world's best mines. Probably need $70, $80, $90 for the better mines around the world to be incentivized and move forward. So we're very much in a first inning. I think you're going to see a lot of these play out before our eyes, even over the course of this year and into next. But again, it points to the uranium space. I'm a big believer in all the commodities that are represented in this conference, and I invest in all of them. But I think uranium is probably the best situated commodity that we have today. It's up 18% year to date, but we're really only beginning to start. This isn't the most efficient market. That's horrible when the market's oversupplied. It causes prices to go down lower and stay down longer than would normally be the case with a copper, gold, or silver. But when markets go into undersupply, that inefficiency in market is the investor's friend. And you're going to have uranium prices increase significantly, but you're not going to have the production response that would be typical in, say, copper. So again, I encourage you to look at the uranium space. Certainly spoke this morning about UEC and URC, but this is going to be a time for our sector that I think will only be matched by really the dawn of the atomic age. And it's interesting that the Oppenheimer film is out right now. But we saw the early growth in nuclear power. I see a lot of fundamental similarities to those early years and those earlier bull markets, but I also see things that we had a lot more inventory in the last bull market. We had different conditions that we don't have today. So I think look for the best times that we've seen in the uranium industry and nuclear power in our lifetimes, and I hope you're all invested. And if you're a new investor, get into the uranium market. Your timing is going to be very good. If you've been a patient, perseverant investor, I think your patience is going to pay off. So with that, thank you. I wish we could have got to questions, but I think do we have any time? Yes, so I'm the CEO of Uranium Royalty Company and the Executive VP of Uranium Energy Corp. Uranium Energy Corp is an 18% shareholder of the royalty company. UEC is a minor developer in Texas and Wyoming. Uranium Royalty is a global royalty company built on the model of Franco-Nevada, Wheaton Precious.
I think, gentlemen, just here. Have we got a microphone, girls?
Just please repeat the question.
Okay, go ahead.
Last cycle, there was only one or two mines.
Yeah, I mean, if you've got sons and daughters, nieces and nephews that are scientifically inclined in science, chemical engineering, mining engineering, or geology, I encourage them to look into this industry. But you're right. Our company, we're fortunate. Even though we went through a very difficult, long bear market, we did manage to keep our key technical people in exploration, development, mining, but we also brought along people from Texas A&M to kind of have a mentorship under them. So when those veterans retire and go off to Phoenix, we've got younger people that have worked under them and can carry on. But it's a huge challenge in a lot of industries. But I think if you look at the sciences at Colorado School of Mines, petroleum engineering, mining engineering, they go through these cycles. But if the jobs are there and the salaries are there, the graduates will come.
We hope.
We hope.
All right, ladies and gentlemen, please thank Scott. Great presentation. Thank you.